Tom Lee just made a huge prediction to Cathie Wood. We've got two giants from the market. Check this out.
Been saying is you think that the Ethereum network or market cap is going to flip with Bitcoin. Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as a global monetary system, rules based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH, or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, et cetera. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
Cathie Wood sees the crypto ecosystem hitting $25 trillion by 2030. And Tom Lee thinks Ethereum could flip Bitcoin by becoming the infrastructure where all of Wall Street gets tokenized. His historical parallel is perfect. Gold didn't lose after 1971, but equities grew 20 times larger because that's where financial innovation happened. Tom Lee thinks Ethereum could flip Bitcoin by following the exact same pattern as 1971. Gold stayed valuable, but Wall Street building financial products on top of the dollar became 20 times bigger. Tom explains that after 1971, when the dollar became fully synthetic and no longer backed by gold, Wall Street created 14 new financial products: money market funds, credit instruments, mortgage-backed securities, futures, and all of that drove dollar dominance from 27% of GDP to 57% of central bank reserves and 80% of financial transactions. Equities today are a $40 trillion market cap versus gold at $2 trillion. Tom believes Ethereum could flip Bitcoin similar to how Wall Street and equities flipped gold. I do think this is an interesting comparison, and from the face of it does make sense when you understand what actually happened in 1971. Nixon took the US off the gold standard, which meant dollars weren't backed by gold anymore. Gold didn't disappear or lose value, it actually went up. But something bigger happened. Wall Street created an entire financial system on top of the dollar. Money market funds, mortgages you could trade, future contracts, credit cards, all of these products that didn't exist before. These financial products built on top of dollars became worth $40 trillion. Gold today is only worth $2 trillion. The infrastructure layer became 20 times more valuable than the base money layer. Tom's betting the same thing happens with crypto. Bitcoin is digital gold. You hold on to it as a store of value, just like people held gold. That's valuable and important, but Ethereum is where you buy financial products. Want to tokenize a stock so people can trade it 24/7? You do that on Ethereum. Want to tokenize real estate so you own a fraction of the building? Ethereum. Want to create a loan that executes automatically? Ethereum. All of Wall Street moving onto blockchain means stocks, bonds, real estate, everything gets tokenized. That doesn't happen on Bitcoin because Bitcoin wasn't designed for that. It happens on Ethereum because Ethereum was built specifically to let people create financial products and applications. Tom isn't saying Bitcoin fails, he's saying Bitcoin succeeds as digital gold, with his predictions reaching $1.5 to $2.1 million per coin. But Ethereum becomes a platform where trillions of dollars in tokenized assets trade. Just like gold stayed valuable, but Wall Street products became worth more, Bitcoin stays valuable, but Ethereum ecosystem potentially grows larger. Think of it like this. Gold is valuable for strong wealth, but the stock market, bond market, and real estate market combined are way more valuable than gold because that's when money actually does things. Bitcoin is the new gold, Ethereum is the new Wall Street. Both can win, but historically the infrastructure where activity happens becomes bigger than the thing people just hold. But there's an even simpler reason Ethereum might win that has nothing to do with Wall Street. Ethereum could potentially flip Bitcoin simply because you can build things on Ethereum, but you can't do much on Bitcoin. And platforms where people can create always attracts more activity and value than platforms that just store money. Tom describes Ethereum as a neutral, smart contract platform where a lot of Wall Street will innovate real-world assets. Bitcoin and Ethereum have fundamentally different purposes. Bitcoin does one thing really well, it's digital money that can't be controlled or inflated by governments. That's incredibly valuable, but that is basically all it does. You can send Bitcoin, receive Bitcoin, and hold Bitcoin, and that's the entire feature set, which is by design. Ethereum is a platform where developers can build whatever they want. You can create apps, games, financial products, marketplaces, anything you can program. It's like comparing a really secure bank vault, Bitcoin, to an entire city where you can build businesses, Ethereum. Both are valuable, but one enables way more economic activity. This matters because developers and entrepreneurs go where they can build. If you have an idea for a new financial product or application, you build it on Ethereum because Bitcoin doesn't let you. Over time, that means Ethereum accumulates all the builders, all the innovation, and all the new products. Bitcoin stays focused on being money, which is great, but it means everything else happens elsewhere. Think about the internet versus the telephone. Telephones were amazing for making calls, super valuable, but the internet let you build websites, email, social media, streaming video, online shopping, unlimited possibilities. The internet became way more valuable than phone networks because platforms that let people create beat platforms that do one thing, even if they do that one thing perfectly. That's the same dynamic here. Bitcoin is perfect at being digital gold. Ethereum is imperfect at lots of things, but lets people experiment and build. History suggests the platform with builders and activity becomes more valuable than the platform that just stores value, even though both are really important. Both can succeed. Bitcoin's bull case is becoming the best way to store wealth outside of government control. Ethereum becomes a place where new financial systems get built. If you appreciate the work that goes into finding and putting these clips together, becoming a member really helps us invest more into it. Every bit of support really helps. Thank you.